Good afternoon, friends. So today I'm going to show you the fundamental analysis of one of the top quality company in Indian share market. The current market price of this particular company or particular share is 8,270 and current price is 428. Just 428. High price is 450 and low price is 303 in last 52 weeks. The stock P 43. So usually in the mainstream line you will see this kind of high P 43 now. Book value 76. So right now the current market price is something you can say price to current, you can say like price to book value something 5.6 right now. And if you talk about the dividend yield is 0.7 and return on capital employed is 18, return on equity is also 13, face value 1. So if you talk about if it's the face value of the 10, then the current market price of 4,000 rupees. But right now the face value is 1. PEG ratio is 0.95. If PEG ratio is in something less than 1 is called good indicator of the going the price in higher side. Next is equity capital, just 19.3. Current ratio 4.17. It is showing that the current assets something 4 times from their current liabilities. Next is price to book value. Price to book value is showing 5.6 as I told you. Now growth factor is 4 and Piotrowski 6. So growth factor 4 and Piotrowski 6 something called as a very good sign, not a bad thing. If you talk about the market to quoted investment is nothing. Return on asset for last 5 years just 10% and debt to profit is 0.01. It means that the company is not having single rupees of debt. Okay. Now next is company Altman score is 9.8. If Altman score is greater than 3 is called as very good sign and very good balance sheet of the company. Now difference in IV is showing minus 7,000. It means that the company current price is something greater than their intrinsic value. Now number of shares subscribed. One is the how many numbers? So 19.3. Before 10 years ago it's 17.4. It means that the solid check is something 1.11. It is called as if solid check is 1 or less than 1 is that is a good or best. If it's something around the 1, that is also you can say fine, not a bad thing. EPS for latest quarter is 2.55. EPS for the whole year is 9.8. And sales variation for last 10 years is 15. Sales variation, profit variation for last 10 years is 36%. That is also very good. Now, if you see the chart of the company, okay, so let me show you quickly what is how the chart is looking. If you see the maximum chart of the company has given multi-bagger return. Okay, so for example, the company price was just 5 rupees, 8 rupees 2012. In 2000, almost 2020 till 2020, the price was just 34 rupees. Now company's price is around you can say 400 something, 428. Very good multi-bagger return given by this company. Now what are the pros and what are the cons? Company is almost debt free, expected to give good quarter. Company has delivered good profit growth of 46% CAGR last 5 years. Company has been maintaining a healthy dividend payout of 43.3%. Now what are the cons? The working capital have been increased from 112 days to 219 days. That is the one concern. So now what are the things here? So if you see and focus on the overall sales growth of this particular company, you will see that the company's sales was 100 crore in March 2020. After that, when the pandemic happened, the sales goes down to 76. But as soon as the quarter goes, the sales are increasing. And now you can see the current in the March 2023, the sales was 207 crore. Excellent business by this company. And if you see the operating profit, company is having the operating profit around 24% margin. Okay, and 50 crore profit, operating profit, and it was 20 crore in 2020. Excellent business by the company, and operating margin maintaining very excellently by the company. Now if you talk about the other income, company is having other income, you can say company is having 25 crore other income, which is increasing every quarter. Company is increasing other income. Interest is very low, just 2 crore interest. And also you can see the profit before tax was increased from March 2020. It was 22 crore, but now it is 65 crore profit before tax. And after you can say the net profit is increasing exponentially here from 15 crore, 50 crore, 15 crore to now 50 crore, and EPS is also increasing exponentially here. Excellent company. Now let's talk about the overall, you can say, profit and loss for this company. In March 2012, you can say this particular company was having the sales of 161 crore, and you can say the profit just 19 crore and operating margin 12 crore. As soon as the year goes, the everything increasing here. In March 2020 there was something happened, but still company was able to maintain the operating profit of 12%. But now the company is having 32% operating margin in last 3 years. 2021 29% margin, 32% margin in 2022, and 29% margin in 2023. Excellent business by this company. Now if you see that the company also operating profit is also increasing from 19 crore to now 220 crore. The exponential increase in this overall profit by this company. Now if you talk about the interest, company interest is also, you can say, around 5 to 6 crore. That is also fine, not as a challenge. Profit before tax is also increased from 10 crore to now 254 crore last 10 years. Excellent business by the company. Net profit is also increasing from 1 crore to now 190 crore. What an exponential business, exponential growth by this company. Dividend payout, there is some 61% dividend payout by this company. Now if you talk about the compounded sales growth, it is showing in last 5 years the compounded sales growth is 16%, and compounded profit growth is 46%. Stock CAGR is 44%. Return on equity is 15% last 5 years. And if you talk about the balance sheet, you will be surprised that the company is having the balance sheet right now. The share capital is 17 crore. Now it is showing there is some enhancement in the equity capital is 19 crore. Okay. Now if you talk about the reserves was in 2012 the reserve was 90 crore. Now reserve is increasing 1458 crore. What an exponential and extraordinary increase in this overall reserve by this company. Borrowing, the company was having borrowing something like 50 to 60 crore in March 2013, but after that the company's overall borrowing also reduced. Okay, now it is showing just 1 crore borrowing, means you can say zero borrowing. Now if you talk about the overall fixed asset and everything, the company is having very good investment here, 361 crore investment. If you talk about other asset, inventory 70 crore inventory, which is highest ever. Trade receivable 151, which is also highest ever. Cash is also 514 crore cash, highest ever cash. Everything is exponential for this company. What a good company. Saregama India. So this is the company name, Saregama India. Now let's go check here. After that, total asset. Now cash flow. If you see the cash flow, this company is having excellent cash flow now. Now debtor days also, you can say something increased. Inventory days also increased. Days payable increase. Cash conversion also increased from 68 to 244. These things are increased. Because of that, the return on capital employed is saying 18%, but company has maintained 34% return on capital employed. Shareholding pattern, you will be surprised that the company's shareholding pattern is something they have increased from March 2012. The March 2012, the promoter has been 57.65. Now it is having 58.49, and they are maintaining tightly their particular holding. FII increased their position from now 9% to 17%. DII increased their particular position from 2.6. DII reduced. There is slightly reduction from the DII. Public is also holding intact here, 21.13. Okay. Others is also having some kind of stock in this particular company. You can read more information about this particular company. Just I wanted to show you what is the name of the company. Company name is Saregama India Limited. Okay, now in the last trading session, company was having 7.31% increase in the price. What the company is doing? Saregama is the oldest music label company from India, established in 1902. And the company is Gramophone Company of India, and then HMV. And the company is aiming to be the pure play content company supported by the global consumption boom. Since 2017, Saregama has been making a heading against the own launch of two unique initiatives, Saregama Karma and Udil Films. So let's go to the website of this company. How this company is, the company name is Saregama India, as I told you, and this is the website of the company. You can listen all the different music they are providing. Very nice, and very nice range of product they are having. Also, you can say they are also having some Hindi language, different language radios, and the different things. Very good thing. I think you can read more information about this particular company. Okay, here from the product, what are the product they are having. You can read more information here.